Hello everyone. So today we will be talking about Ola Electric, the stock which everyone is talking about in the markets. So Ola Electric recently IPO'd in the Indian markets, and after the IPO, it saw great subscription from the Indian retail investors as well as the FIIs and AIIs. So if we see Ola and if we compare it with Zomato and Paytm, so the common thing between these three are the profitability, and both of all of them are startups actually. So when Zomato and Paytm also IPO'd, at the time they were also loss making, and similar the case with Ola as well. But the case with Zomato was that after some time, got converted into the profitable company, and due to which the stock price actually zoomed a lot. But whereas we see the scenario for Paytm, it had a great subscription from retail, and after the IPO, its stock also got zoomed a lot. I think after the IPO, it was above 10 to 20%, and after that, the journey was not so good. After that, Paytm, I think, dropped, I think, greater than 70% of its market value, and now it is trading around 65% below from the all-time highs. So seeing that trend of the startups, we also should basically go through Ola's business and how the business is doing, because if we see, so if Ola is able to get profitable in the coming months or coming years, then the stock price will also move with it, because as the stock prices always move with the profits that the company is making. Currently, Ola is a loss-making company, but we will need to check if it can get uh, profits in the coming years or coming months. But seeing the trend that we are seeing, so there is some euphoria in the market. Even being a loss-making company, Ola got subscribed 4 times in the retail participation. And after that, the journey of 5 days after it got IPO'd, the stock zoomed around 75%. So the closing that it had today, gives it basically 75% of the uptrend from the IPO price. So in this video, we will be going through the Ola's business, its financials, and we will see that we should either be investing in it or we should be skipping it for the time being. So let's move ahead with the video. So we see the news articles that are being published every day. Everywhere it is a hot stock. It have become a red hot stock now. And the thing is, because it gave a massive 75% returns in the previous five days. And if we see at different fund houses like HSBC, so we will see that they are giving a positive commentary towards it. And we are also seeing that there is some euphoria in the market. If we will see in these articles, this is taken from Economic Times. If we will see that the target price that HSBC gave it was 140, and today is basically it reached 133. So the target price was also reached, and it is not like it have taken months getting to that target. It happened in just 5 days. So due to which it have like increased retail participation towards it, because it is looking attractive, a lot attractive. We will need to see like is the euphoria that we are seeing around it, is it sustainable, or we should be digging deep inside it why it is happening. So we'll be talking about the same things. So just one update here. So on Independence Day, Ola Electric actually released two new bikes. So previously it used to deal in scooters, but now they have come with two e-motorcycles. And basically those are Sportster and Arrowhead. So if we look at Ola's business and what is the history behind it, so we can see that it was founded in 2017, and it is mainly in the business of two-wheel electric vehicles. And also they also produce some components like battery packs, if we see, and vehicle frames and all that. So we can say that sort of most of the things are in-house, and these are basically produced in future factory. So if we see, the electric vehicles segment in India have just started in last 1 2 years, and companies like Ola have started as the first comers in the segment, and they have came with e-scooters first, and they now are coming into the motorbike markets. So here, if we see the market leadership is with currently with Ola, and if we see that it is enjoying a 31% market share in the two-wheeler electrical two-wheeler sector, and currently they have basically 3.2 lakh scooters, and they have sold in FY24. But and if we see the product portfolio of Ola in this segment is basically they sell four type of vehicles: S1 Pro, S1 Air, S1 X Plus, and S1 X. And apart from that, they have just launched two bikes, which they demonstrated in the Independence Day. So apart from that, if we see that what was the reason of IPOing this particular segment of Ola Electric was that they had, we will talk it about later, that they had actually a lot of borrowing which they want to repay, and also they want some capital expenditure that they want to do. If we see, it is from the DRHP report that they submitted to SEBI. So if we can see in the right hand side, we can see that the IPO details that they are having. They mentioned that this fresh issue capital that they will be getting from the IPO that they will be doing, they will be using it to the capital expenditure for its subsidiary, and also repayment of borrowings, and in the research and product development, and similarly for the general corporate purposes. And if we see the stock price in the last 5 days, it have given a whopping 74% gains. And when there are gains, there is a huge retail participation. And we will see ahead in the shareholding pattern as well that the public is basically having a lot of exposure to that company. So, okay, if we move ahead to Ola Electric Mobility's financials, so here we can see that its market capitalization is 58,000 crores and current price is 133. But one thing to note here is that the stock is not having PE. When a stock does not have PE, that means it is in losses. So currently, Ola, we will also get to the financials and the profit and loss statements. But here we can see that the stock is not having any PE. That means, and also it is loss making. And the similarly, ROC will be negative and operating profit margin. So it is basically how margin the company gets after selling its product. So currently it is minus 25.3. So that denotes that if particularly a company is selling a product of 100 rupees, it is taking a loss of 25 rupees on that. So let's say I'm selling a product with a price of 100 rupees, but I created that product at 125 rupees. So this is the scenario that's when we get the OPM of 25% minus. The good thing is it is they have not pledged any equity. And apart from that, if we see the face value is 10, that's fine. And the debt to equity, this is the main thing to note actually here, that the company is having 600% debt. So, which is a huge number if we consider, and if we are having an equity, uh, it is generally not good to like take so much debt. But if we see that, what does this indicate that the 6.41 but debt to equity ratio, what does it explain is that the company is hugely reliable on the debt that it is taking to for its capex. And if we see in the right hand side, 39% of the electric vehicles in the two-wheeler market, electric two-vehicle market, Ola is having a dominance there in the two-wheeler market share. But we also need to note one thing here, that the other competitors that Ola is having, like it is TVS, Hero MotoCorp, we can say, and other companies, they are well established and not in so much debt. So when the market cycle is good, when the money is pouring into startups and markets, it is fine. Like companies survive with debt, but when the hard time comes, like when this the amount of money that is circulating in the markets, when it gets squeezed, it is a hard time for the companies which are having huge debt. So it is generally avoidable to use companies that are having so much debt. So that is one point that we should consider here. Apart from that, if we see shareholding patterns here, So we can see that the promoters of this company actually is having 36.78. When I checked last time, 30% stake uh, was being held by Bhavish Agrawal. And apart from that, if we see that 7.6% are FIIs are holding and DIIs are holding 6.7%. The main concern point is generally that I was saying is the public participation in the stock, that is 42%. And generally having public holding of so much of the stock is generally considered bad, because the reason behind that is when some crisis comes or stock just dives, at that time the public basically, when they start selling, it creates, they are called weak hands, so it creates a lot of selling at that time, which which is not a negative point, but it should be considered while analyzing a stock. So as we can see in this chart, that the cash from operations. So cash from operations for Ola Electric is selling the motor vehicles. So cash from operations, if we see in FY 20, we can see that it was nearly around 150 CR, and after that it was a loss of 150 CR, and then it increased to minus 300 CR. And similarly, and forward back to March 2023, for that year, the loss that they were having from the operations, from the cash from operations that they were getting, it was one minus 1.5 thousand crores. So we can see that the companies was like not having cash in hand, but was having loss when we see the cash from operations when we are seeing. But after that, in March 2024, they basically dealt with it a bit, and the losses came, the cash from operations came down in negative, but it is still in negative. But if we see that it was a better from the previous year, so they just IPO'd. So here we can see that the capex blocks that we can see. Capex is the capital expenditure that the company is doing in its capital, and like the factories that they are creating and all those things. If we see that they are increasing uh, for every year sort of, and the free cash flow that we can see, it is also getting down. So company is not actually having cash with them, but they are increasing the capital expenditure. So if we take a moment here to think, company is not having cash, but still they are doing the capital expenditure. They are opening new factories. Where is this money coming from? So the answer to this lies in the second chart, that the borrowing of the company is too much. So if we see in the second chart, it is showing the net debt, the loan that the company has taken, the borrowing the company have taken. So if we see that from March 2019, we can see that the net debt we were seeing, the net debt in the company was always sort of greater than 1000 crores. And if we see the total debt the company is having, so it is constantly increasing in an uptrend, and currently it is 2000 crores. So currently the total debt on the company is 2000 crores if we see, which is not a good thing for a company, because the thing is that if you are doing all your expenditure, capital expenditure, if you are doing, you are growing on the basis of debt, that is a bigger problem. So here we can see that that's one more problem that we can see with Ola Electric. Now, if we come to the financial uh, statistics, then we can see here that for every year, if we compare it year wise, that we also saw in the charts as well, that the sales that they are doing and the expenses that they are getting from doing that sales is basically expenses are greater than the sales. So, and if we see the operating profit margin for FY 2024, we can see that 25% minus was their operating profit margin. So they had to actually burn 25 rupees more for selling a vehicle of 100 rupees. And also, if we can see that the net profit of the company is basically increasing year by year. If we see in 2021, it was 199, minus 784, minus 1472, and minus 1584. So the losses are currently increasing. So here we are seeing the most important point that we are seeing in Ola Electric is that it is having huge losses. And in the right hand side of this particular table, if we see, so here we can see the operating activity, the cash that they are getting. So as we saw that the company is in losses, so it is expected that all of the cash that we will be getting here will be in minus because the company is actually burning cash in the operating activity. Operating activity denotes that what the company does organically, which is selling motorbikes and e-scooters. So here we can see that all the money is actually going and they are not getting any cash. So minus denotes that that the money is going away from the company. From the investing activity, if we see, so we can see that the company is constantly from FY 2022, they are constantly basically putting money in capital expenditure and all that. So that they are investing in it in their company only, factories and all that. So the money is going there. So the money is coming from the financing activity, if we see, and financing activities are the borrowings or the loans. So if we see, so in this cash flow table, we can see that the company is actually borrowing a lot of money for its doing its capital expenditure, and that money is also going in their operating activities as well. So now the bigger question arises here that what should we do with the stock and will it be the next Zomato or the next Paytm? So all the points that we discussed above, we can see that the main problem that the company is seeing is its debt. So I think one plus point that the company was having that previously the revenues in the last quarter was at all-time highs. The number of scooter that they sold, they were at all-time highs. So the company revenue-wise, it is able to do good. But the main problem lies in the profitability of the company, where the company is having losses while selling its products. So, and other thing we will have to note here is that the stock run up that we have seen in the past 5 days, if we see the Zomato's stocks or the Paytm's stock in the first some of the days when it IPO'd, we can see in both of them that there was some euphoria around both of these stocks. They were startup, they were recently listed startups. And we saw that there was some euphoria in the market and people were excited about it. But then we can see the decline that they had after some time. So if we talk about Zomato, it was 70% down from its top after IPOing. Similarly for Paytm, it was around 70 to 80% down from its top. One point to the retail investors I will suggest is to be cautious and not get into the FOMO buying here because anyone can do FOMO if we can see that in the past 5 days, 75% returns have been made. But we should also take care that we should also focus on these points that we discussed and then we should make a call. What I am doing is I'm just waiting a while. I just want the stock to get the price identification. So after the IPOing, there is some price identification that goes on. Market values it accordingly, and we can see its earnings, how it comes in the next few quarters, and we can see if they are able to get some profitable. Because from here on, if they can get profitable with this, like it happened with Zomato, then I think there is no going back. Because as we saw also with Zomato, it just zoomed a lot in just 1 year. So if they are able to get that thing done, I think it will be really good for Ola, and we will have to see that in the upcoming months. We discussed all the points that we had. Now it's a call that you can make if you want to go ahead with the stock, or you want to analyze it, or you want to buy it or sell it. I'm not a SEBI registered advisor, so please discuss it with your financial advisor and take a call on it. So that's all we had for today. Thank you very much.